Welcome to the Rogue Trading Communities video, and this video is about Wyckoff Schematics and how to trade them. And this is for all types of traders. Okay, so you could be a day trader, you could be a swing trader, or you could be a positional trader. So this is applicable for any traders out there, and you can use this concept in any instruments until and unless you have a good market structure and volume in that financial instrument which you want to trade. Okay, so today on the Rogue Trading community, we actually took a trade in TechM, and yesterday we took a spring trade in Hindustan Unilever. So hence I thought, why don't I make a video even for the subscribers so that even they can understand like how to trade using Wyckoff Schematics. And I'm gonna give you an entire breakdown, and you can easily get an idea where to find Wyckoff Schematics in the market and how to trade them. The entire part will be covered in this video. Okay, so let's get started. Now, those who don't know what is Wyckoff Schematics and how to trade them, if you're watching this video for the first time, well, I have already made a theoretical video of what is Wyckoff Schematics, and I have given some practical examples. How does Wyckoff Schematic looks in the market and what kind of results it gives us. Then I have already made a video about it. Link will be in the description for that video. Click on it and you can go ahead and watch it. And also, if you have already watched multiple time frame analysis part 1 and part 2, this video is for you. If you haven't watched multiple time frame analysis 1, 2 or Wyckoff Schematics, I'm really sorry. You might not understand this video. So please go to the description, click on the links. I have given 3 videos actually. Watch all the 3 videos. Take your time. The video will be here. Okay. Click on the link, complete the video, and then get back to this video. Okay. Now let's get started. Now, when we talk about Wyckoff Schematics, the common Wyckoff Schematics we get is the accumulation schematic, right? So usually it's a buy setup. So you get lot of accumulation schematic in a kind of like an equity markets. People try to buy based on accumulation schematic actually. So even when you want to buy a stock at the right time, when you want to buy a stock for the long term, short term, or swing trading, or even for intraday trading, usually accumulation schematic and reaccumulation schematic is something that we use it. And that is the ultimate reason why we are using this example, this line chart example. Okay. Now, as you know that I've already explained what is Wyckoff Schematic, what are the different phases, but let's jump into the entry part right here, how to trade them. Okay, so when we talk about how to trade, where are the 2 sections that we look for opportunities? One is obviously the spring part, right? And second one is the breakout. Okay, so in a spring, when market comes below the selling climax and a secondary test levels, market tests for buyers and sellers at this section, and immediately you're gonna get a V-shaped correction and a test. And based on that, you take an entry at this section and you book your profit at our creek levels. Also, you call it resistance. Well, in volume spread analysis in a Wyckoff terminologies, we call the resistance as creek levels and support as ice levels actually. But nothing to worry about it. You can call it a resistance, you can call it an ice, you can call it a creek. Anything that completely depends upon you. Okay, so let's say the resistance or a creek levels at this point. Okay, so you take a trade at the support right here and you book a profit at the resistance at this point. Okay, so that is what a spring trade is all about. And the second one is after a phase day. Usually if it is an accumulation zone, definitely you might get a really good breakout, right? You might get a breakout, and based on that, if you're getting a retracement to that previous resistance turned into a support. So usually resistance gets turned into a support, right? But we call it a creek itself actually. That's why we call it back up to the edge of the creek. After a breakout, usually breakout is called a jack actually. After a jack, you get a back up to the edge of the creek in the form of a retracement, and you can take a trade right here and you capture all the further momentum. So those are the 2 types of trades that we take in Wyckoff Schematics, and we actually got an opportunity on both type of trades in different stocks, and hence I'm going to show those stocks one by one right now. Okay, so now let's get started. Let's go to the TradingView terminal and our Rogue Trading Community's private channel. Okay, now great. So now we are in the Rogue Trading Communities members only channel, and here let's start with the 2nd of January. As you can see right, this is the 2nd of January, and from 2nd of January we started giving few stocks to the Rogue Trading Community members, right? So every single stock had a possible Wyckoff schematic setup or possible opportunities we filtered out within the Nifty 50 stocks and we gave them. And hence on 2nd of January we didn't get any much of a trade because market was kind of like in a down move. There was few stocks was in a down move, there were few stocks in a sideways momentum, and also since we were trading in equity markets, we wanted to take only buy trades actually, because either you can take an intraday trade, and intraday trade can be converted into a swing trade also. So that is the ultimate reason. Since we are trading only in equity markets, I wanted to take only a buy trade, so hence we were waiting for a few days actually. And on the 3rd of January we added few more stocks, and based on that we got few setups, and that setup is something that we're going to explain. And the first stock that we're going to talk about is Hindustan Unilever Limited, because as you guys know about it, first we're going to talk about the spring trade, but we got it. So I'll show you one by one. Okay, so now let's get started. In Hindustan Unilever, if you see this, we had like impulse, correctives, and impulse, right? And we had a corrective. And what I was expecting right here is very simple. We wanted a rejection at this levels actually. This correction levels is what we were focused on, and we wanted a rejections at 38.2%, 50% or 61.8% of the Fibonacci retracement levels. And if you don't know why did I use Fibonacci level right here, please watch multiple time frame analysis part 1 and 2 to get an idea about it, because I have given the entire concept right there, link in the description. Okay, so we draw the Wyckoff schematic on that, we draw the Fibonacci levels on that impulse, and we were waiting some sort of a rejection right here. And this was a 1 hour time frame, and that was a daily time frame actually. Okay, even in a 1 hour time frame, as you can see right here, we had rejections on the 3rd of January. Okay, and finally, if you observe carefully, we had a simple Wyckoff schematics at the exactly at 38.2%. Okay, so I drawed the Wyckoff schematic, I shared that in the community on 3rd of January itself. Okay, exactly the second selling climax, automatic reaction, I labeled everything, and I showed them we had an opening, and immediately we had a upthrust action, also a volatile opening, and bounce on 38.2 levels. And what was our expectations and what was our anticipation for this particular stock was, if we had a breakout towards the higher side, we will take a trade, or if we had a spring trade, we will take a trade up to this section. This was the two opportunities we had, and that's something that I was explaining them. Now Wyckoff schematic is forming on 3-minute time frame. Let's wait for proper setup. That I was explaining. And the next day, okay, and the next day we had a spring trade in this Hindustan Unilever Limited. Okay, we had a spring trade, a clear rejection, right? A clear V-shaped rejection. I told you, right? What is a spring? A clear V-shaped rejection and a backup, a retracement. And here we were having multiple demand and supply divergence, or I can say it, supply was being exhausted at this point. We took a trade and we booked our profits, and exactly that's something that we shared in the community, right? And let me show that. Why did I even choose this? Let me open Hindustan Unilever for you guys. Okay, perfect. Now look at here. Simple. A simple Fibonacci, right? Market was at this section. Okay. Now let's go to a smaller time frame. You can go to 30 minutes, 15 minutes, 10 minutes, 5 minutes. If you go to any time frames out there, even a 3 minute, the 3 minutes was something that I was observing, right? This was the section. Okay. This was a section. If you draw it, this was a volatile move, hence I didn't consider this as a selling climax. This was a stable move, that is the reason I considered it. Okay, so we have a selling climax, we have an automatic rally, a secondary test, market went up, market opened on 3rd of Jan, exactly 9:15 candle, came down, bounced back. And this was not a spring actually. A spring is a proper V-shaped structure. I'll show you what is a spring. This is a spring. See, proper momentum, a stable proper momentum, and went up, a retracement, and boom, market went up to this levels. This is what a proper spring is all about. This is not a proper spring. Okay. And we had an upthrust section right here. Right? Simple. Just like this stock right here. Right? Simple. If you can see all the labeling right here, this was a section, and exactly here we took the trade at this section are the 50% levels profit. Right? Let me draw the spring level for you guys. Right? 50%, and the target was here. If you wanted, you can keep your stop loss just below it, no problem. But that completely depends upon you. Since I know that we have this concept called demand and supply divergence, and that is the ultimate reason we know whether buyers are present in the market or sellers are present in the market, and based on that, we can trail a stop loss right here. If I'm kind of like I'm not confident enough, I'll reduce my risk and I can keep my stop loss even up to this point. And sometimes market can fluctuate, and then finally it will hit our targets. And a lot of people ask this question, sir, if I'm taking a trade based on spring like this, right? If I take a trade based on a spring like this, can I hold this trade and can I expect a jack right here? And based on that, can I capture all this momentum? See, you have to understand right here that when you're trading a spring, right, you're trading inside the sideways market right here. So we don't know whether we're going to have a breakout or not until and unless. So that is the reason whenever have a spring, a V-shaped structure that test is below the selling climax, this indicates buyer's aggressiveness in the market. Okay, this indicates buyer's aggressiveness in the market. We are only taking an opportunity to book our profits up to this point, and then later on spring can either reverse or it might break it towards the higher edge, just like the diagram like this. See, you had a spring structure right here, market went up, you had a breakout, and eventually market started creating an up move. This is the traditional line diagram for the Wyckoff schematics, but that's not happens every single time. That is why I always teach the members in the live markets actually what happens and what not. See, we booked the profits immediately, market didn't give us a breakout, but guess what, market broke towards the lower side actually, and that is something we already gave an update in the community. I'll show you. See, this was the update actually, right? So it went up, we booked our profits at this section, and then market broke towards the lower side, indicating this could have been a redistribution schematic right here. Okay, a redistribution schematic. What was the next step? Since it was a redistribution schematic, I told them, and then later on I was explaining them, just because we had a break towards a lower low doesn't mean that this is a failed setup. Probably market will break towards the lower, so give it some sort of a momentum. It might give me one more accumulation schematic, and based on that I can capture all the momentum. Right? So that is something that I was explaining them. Looking at the redistribution zone identified on the lower time frame, it suggests the potential downward momentum in the market. This implies the possibility of rejections occurring around 50% and 61.8% levels on the hourly chart. Upon encountering a rejection, we can anticipate an accumulation schematic on a lower time frame, presenting a high probability trade opportunity. And this was a scenario 4th of January. Okay, and today is the 5th of January, and guess what, we actually got the thing is, I'll tell you what happened in this stock. See, market went below, but it didn't create any forms of sideways market right here. It came below, definitely, we didn't create any forms, but guess what, it literally came back inside the area again, right? It just came back inside the area and started creating a sideways market. What does it mean? It means that this sideways, the absorption zone is still valid. Okay, this sideways zone, absorption zone is still valid. This just acted as a huge spring actually. One could have easily taken one more trade at this point, but we didn't take a trade because we were not sure about this volatile rejection. So hence I didn't take a trade. But what's happening right here? Now, if you observe carefully, there is an increment in volume right here. While market is breaking this creek level, we have an increment of volume comparatively. You see, all the volumes were going down at this section. This was a high volume activity indicating a signal of strength, and market went up. Now it is back to that same area right here, right? So if it is back to the same area, we are having a breakout. Market is breaking this level with an increasing volume. This indicates that initiative buyers are entering the market. Right? New orders are being placed for buy orders. That is what the indication is all about. Okay. So if we get a proper break and a backup, definitely what we can actually do is we can take a trade up to at least this point. I'll show you that. Okay, so let me switch to the 1 hour time frame. Okay, so if we get a good breakout, I'm pretty sure you can take a trade up to this point. That is what the thought process as of now. But tomorrow I'll update that in the rogue trading community for them. If I get a good trade, probably I'll make a video about it and see how this can go up. Okay, so that was what I wanted to explain it. Now let's go to another stock right here. Let's check out the second trade that we got it. So first trade is done, right? So we booked our trade right here. The spring trade is done, and later on market came below, which was okay, fine. We didn't get any breakout towards the higher side, gone. The next trade that we were looking at was Tech Mahindra. Okay, this one. This was one of the trades that we took it. This screenshot was taken on morning at 9 o'clock, 9:44 a.m. Okay, exactly when we booked our profit, we took this trade. But before that, we played a video actually. Okay, so now I'm gonna play a video like this video right here. Okay, I'm gonna play a video right now. See, if you observe carefully right here, this was the setup. Okay, on a 1 minute time frame of Tech Mahindra, I'll explain how the setup and how this formed and so on. But you have to observe what kind of schematic right here. It is an accumulation schematic where it's having a breakout towards the higher side. You see, you have a selling climax, automatic rally. You have a secondary test, an upthrust action. Market came up, tested the levels again and again. We didn't get a spring right here. Understand the fact, right? We didn't get a spring. We got a simple test, and eventually market started creating an up move right here. But most importantly, you have to realize that when market is breaking up, we had an increase in volume. A volume divergence was occurring in the volume, right? So what does it indicate? Again, initiative buyers are entering the market. Just like the previous example I told you, same thing. Initiative buyers are entering the market. This was my confirmation. And I actually, when I made this video for the community members and so on, right? Where I usually uploaded this on the Telegram channel, but yeah. So see, this was the point, right? I wanted to take a trade up to this section, right? I was explaining them. If I had an opportunity, I'll take a trade up to this section. That is something that I explained in the private Telegram channel. And guess what happened? We got a trade, and when market opened today on 5th, we were already on the momentum, and eventually we booked our profit. Okay. It was a really good trade. Let me show that in the channel. Now, yeah, this one. Perfect. So anyways, the primary thought process for this is very simple. This one. Okay, on the 1 hour time frame, I just draw the schematic right here, and market rejected from 61.8, and it has an accumulation schematic right here. So it looked like a accumulation schematic, but it's actually a reaccumulation schematic actually. So if I go to a lower time frames, you have to understand the fact when market was creating an impulse corrective, and market already created a semi reversal right here, and then finally it created a sideways momentum. So what my thought process was is very simple. We had a clear schematic right here, right? A buying climax, an automatic reaction, market tested an upthrust action, right? And what I wanted is I wanted a breakout towards the higher side, and then later on 3rd of January, market gave a break towards the lower side. And again, if we had a rejection right here, a V-shaped correction, just like the spring trade, we could have taken a trade up to this section. That was one of the thought process we had. But guess what? Market completely went down right here. So even I had a kind of like a scenario where I thought, okay, fine. Since market is going down, we might get a better accumulation zone right here, and based on that, we wanted to take an entry at least up to this point. That was the thought process. And guess what? We had the same exact kind of a setup right here. If I switch to a 1 minute time frame, okay, see, this point was our schematics. Let me label it for you guys so that you can understand it, just like the screenshot that I shared in the community. Okay, this is the same thing. Let me label it for you guys so that you can understand it in a better way. Now, as you can see right here, we had a schematic, a clear schematic, right? And if you want to understand what would be a proper breakout, a lot of people might be asking, so spring is fine, right? So let's say when you get a V-shaped structure right here, you get a retracement, and based on that, we can take a trade up to this point. Fine, okay. But what makes a proper breakout? Either it's one candle or a series of candle, doesn't matter. At the end of the day, I want the price to go above that upthrust action levels actually. That is what makes a proper jack. Point number 1 to be noted right here. Point number 2, if I can zoom in right here, right? Or you can switch to a higher time frame to get a sign right here. If you observe carefully, market is breaking this level. But do you see an increase in volume right here? This is what makes a proper jack. See, you might get an increasing volume at this point, right? But the probability market creating a reversal is also higher right here. But when we have to consider a volume divergence, when market is breaking the level, when market is breaking that creek zone, that is when you have to consider a proper jack right here. Okay, so see, right, this was a confirmation. We had a proper jack right here with an increasing volume, and that is something that I also explained in the community. Let me show that image for you. Okay, yeah, this one. See, Tech Mahindra. Exactly when market was creating a momentum, I told them that we had a divergence, volume divergence. See, volume was decreasing right here, but suddenly volume started increasing at this point, right? A properly volume started increasing. This indicates initiative buyers in the market. I told them, like, seems like a good breakout as the volume divergence is present, indicating a initiative buyers presence in the market. That is what I told them. And guess what? We actually took a trade and eventually market started creating an up move. Today when market opened, it already opened with a drastic move, and within few minutes, actually within 9:42 and so on, we had a target hit and we booked our profits, and that is something we shared in the community. Okay, this is what it is. 9:44 around, we actually shared the screenshot, but that was the thought process right here. This was a swing trade actually, because we entered on 4th of January, but we exited on 5th of January's morning. Okay, this was a swing trade, not an intraday. But the first trade, when we took a trade, right, this one was an intraday trade. Okay, because we got the opportunity, because this was a very small trade. Even I knew it. If we had an up move, definitely we'll have an up move at least up to this point, even before either it's gonna reverse or a breakout. I don't really care about it. Since I'm taking a spring trade, I want to book my profits at this point. I want to book my trade at this point, and hence I wanted to take this trade. And yes, that was the thought process of a spring and jack. And guess what? This is not enough actually. The thing is, it takes a lot of time for me to explain how to take a trade based on jack, spring. There are different concepts that's included in it. Well, I'm gonna keep making videos like this in the upcoming days. If you liked it, then comment in the comment section and like the video, so that it motivates me to make more videos like this, so that it makes your trading better every single time. Okay, so that's it for this video. Thank you so much, and we'll see you in the next videos. Goodbye.